There are huge things happening in the Pulse Chain ecosystem right now. We need to talk about them. This has all been happening in the last week. Okay, crazy stuff is happening. Fees are getting burnt. All these coins are about to get way more scarce, and it goes deeper than you think. The latest Richard Heart announcement is that INC's inflation just got cut by 10x. Here's the post about it, okay? This just happened about 2 minutes ago. Basically, INC is the yield farming token, and it was getting emitted to anybody that's yield farming on app.pulsex.com. So if you're yield farming in any one of these yield farms, you're getting up to, 30, 40% inflation, 50% APY in the form of INC token. And that just got 10 times more scarce, which means, as we can see, the price of INC is obviously pumping super hard. It's probably going to keep pumping for a little bit. So congrats to all holders. Guys, there's stuff going on with PulseX and PLS with the buy and burn ramping up with Pump.tires. The Hex origin address just 2 days ago staked billions of Hex, eHex and pHex, by the way. Not only maybe as a flex, but potentially to lower the inflation rate of Hex as well to stop these rolling stakers from permadumping on our heads, these whales and sharks that just keep suppressing the price because they're getting too much inflation, it seems. It's all happening so fast. And on top of all this, guys, the liquidity. Has anybody noticed this? The liquidity on US dollar paired with Pulse. Okay, this is the liquidity that basically is backing the whole ecosystem. So you take these liquidity pools. These are the primary liquidity pools backing PLS. The US dollar price. Okay, this is what you care about. You don't really care about a coin tied to a meme coin. That doesn't affect the US dollar price. And the total liquidity symmetrically is 34 million. For example, on DAI Ethereum. And we divide that by 2. So that's 17 million DAI is in the bid side, okay? 17 million DAI stablecoins and $17 million worth of Pulse. So 17 million plus, let's call it 6 million. So that's 23 million plus about 5 million. That's about $29 million of stablecoins backing the entire ecosystem. I remember this being about 70 million a couple months ago. So I don't know if people are removing liquidity on purpose. I don't know if the origin address is removing liquidity on purpose. Think about why this is happening, guys. See the big picture here. If you're seeing what I'm seeing, you're going to get extremely excited about this. The lower liquidity means, yes, coins dump harder, but let's say somebody was going to gear up for a big pump, maybe a big news announcement, maybe some positive, legal landscape in the USA, perhaps. I don't know, maybe the SEC goes away. You want lower liquidity so that it can pump harder. Also on the way down, if you want to shake people out, you'd also want lower liquidity. So again, this was about $60 million of stablecoins backing essentially the whole ecosystem just a couple months ago, from what I remember. Okay, but now it's half that. It's less than $30 million. The Pump.Fun clone has already burned 8 billion PLS. 8 billion PLS is about $400,000, and this is just from the 1% of PLS getting burnt on trading fees every time people buy these coins, okay? And when these coins graduate to PulseX, there's a 200 million PLS liquidity pool that's also burned. So for like every 5 coins that graduates to PulseX, another billion Pulse is just burned in those liquidity pools for the meme coins, and they're locked. Locked liquidity basically can't be touched. So there's burning going on everywhere. And guys, it's just like, even on the PulseX side, okay? Look at the amount of total circulating supply burnt, 6.23%. 5 days ago, this was 6.1%. So 0.1% of the total circulating supply of PulseX has been bought and burned automatically because that's what PulseX does. If you don't know about PulseX already, all the volume on app.pulsex.com, some tiny fraction of that volume is automatically going to buy and burn PulseX. Guys, 0.1% in 5 days means 1% in 50 days, which means in 500 days, that'd be 10% of the supply gone. So is there an epic supply shock coming? I don't know. And let's talk about Hex for a minute too. Why would the origin address stake Hex? Well, number one, I believe it's also partly just a flex, and also partly a signal of, Richard Heart or the origin address owner saying, yo guys, I'm totally fine. I still have control of these keys. You don't know who it is, but I still control it. So, whatever FUD you have that I'm on the run or that I'm about to lose or I'm scared or I'm dead or whatever the FUD of the day is, pretty obviously not true. Okay, pretty provably wrong in that point. Who said, what if the origin address just good accounting functions, the Hex? So when you run the good accounting function, you stop the bleeding, but you don't actually mint the Hex back. So that might keep the artificially low yield on hold up until whenever they decide to end the stakes. So, I could see there being a good accounting function run in 5 days, and then you just have basically a dormant mega stake that lowers the Hex APY for all the permadumpers.